Hey all, Tom Weller here from forexreviews.info. Well, this is part 9 of the price action trader's mindset. And if you've been following along in this, we're up to part 9 in this series, then I really appreciate all the support and all the likes you guys have been giving so far. In this part, we're going to go over a really, really, really important element in trading. And there's not going to be a single person that doesn't relate to this. And this relates to whether you're a price action trader, any form of trading strategy that you trade, this will apply to you as well. And that is the concept of patience. Now, there are a number of different aspects where patience can work for us and patience can work against us in trading. Let me go through the common elements and the common flaws that us as traders and many traders that are new to trading or are learning the ropes of trading and are learning that, the overall process of trading. Because trading really overall, and I'm sure you guys, if you've been watching my videos for a while now, you will know that I mention the word process a lot because it is a key element to trading. Now let's have a look at this. Okay, some of the key factors. People not waiting. Say you're a price action trader. Traders feeling like they don't need to wait for the bit of price action to close. That's a common problem in many traders. You really need to be patient. Wait for that candle to close, and then, however your entry rules are in relate to that candle, you want to trade it that way. Okay, now if you purchased my Engulfing Trader series, which is a premium coaching series on how I trade price action, in particular the engulfing candle price action, then you'll be familiar with this already. However, like everyone has a different entry rule for that. But you really need to wait. If you're a price action trader and you're abiding by candlesticks, you have to wait until they close. Now, this can be seen. Many traders do this and they fall for this flaw where they feel like they can cheat the market or they can get in that little bit early before the candle's fully formed. And it's okay if you want to put your hand up to this. You get in on the market 10 minutes before the candle close, or maybe get in maybe even halfway through before the candle close. It's going to close like this, and then lo and behold, before the candle finishes closing, it doesn't close anything near or anything like what you would expect it to. So this is where patience comes in. And it was a common problem that I had in my early days when I was learning how to trade as well. I can say, like, I completely relate to anyone else that has issues in patience as well. But it is something that if you want to be profitable in trading, you have to learn to master. It's a must-have. Not only is patience a must-have, it's patience with discipline and understanding the process. And I'll go over a couple of other key aspects. Another aspect that patience is important is for all those people that just as soon as their trade gets into profit, they want to close it. Now, if you're the sort of trader, you'll relate to this. You see your trade up 10, 15 pips or 10 pips or so, and you're like, oh, the market might turn around now. I better close this trade. And that's what I'm talking about. You're not following your trade process. You have a set place where you're going for your take profit. You know your risk on that trade, and you're not letting your trade go to its full potential. And often at times, you might go back to the chart and check it and then go, oh wow, it actually got to my take profit area. And this can happen to a lot of traders, and they can fall into this pattern. This is where we fall into these patterns of, traders can fall into these patterns of bad habits where they think that, oh yeah, and this is what probably makes a lot of scalpers as well. They actually probably don't come into the market thinking they're going to be a scalper or trade like that, but they eventually give into it because they form bad habits of just taking small nibbles from the market all the time, when in a time effective manner it's actually usually not a constructive way of trading. Okay, so that's another element of patience. Another element of patience is we all know that there are certain places on the chart that we should not be trading, right? These are certain price zones, in between certain price zones, between support and resistance. Now, if you have a filter in between these zones, then yeah, but be patient between your filters. If you want to be using a filter in between these zones, for trading. Okay. Now, but what I'm trying to get at here is for those traders that are support and resistance traders or structured traders, is that you need to be waiting for price to get to you. And this is a common saying in Forex as well, is, you know, wait for the market. Do not force a trade, right? Wait for the market to come to you and then look for the opportunity. And it's a very, very powerful statement, because it's basically saying that, you know, we know that there are key levels in the market which offer exceedingly high probability trades over and over and over again. And when prices are in these zones, we can just jump on a trade if the price action aligns in that zone. And that's what I call a complete act of discipline in the Forex market. And that's just an aspect that we have to learn in trading. It's also an aspect that I go over in my premium training course, which is the Engulfing Trader as well. So if you guys want to find out about that, or you haven't purchased that yet, you should, you know, just jump over my site and you can find it all about it. Okay, so back onto the subject again. Yeah, patience. It's such an important aspect. Like I said, you know, another one is, and this is another one that, you know, this was never a problem for me, you know, in my earlier days, but some people, this can be a problem as well. They feel like they need to cut their losses earlier before it gets to their stop loss. And then they find out later on, hey, wait a second, it never got to my stop loss area. And that's an aspect of not having patience as well. They're wanting to cut out. And there can be so many different levels of where patience can go against you. Let's look at this let's look at an example here on the chart. I'm just on the GBP US, and just recently GBP US came back down to a, well, let me go to the daily and you'll see it in detail. This is a resistance zone that now became support, right? So we look left, resistance, support. Now drop down to the 4 hour. Now, as you can see, price came all the way down here, giving some nice bearish signals as we're coming down. Then when we got to this resistance becoming support zone, price went right through it. It actually went through it by about 28 pips. So this is what I'm talking about, patience as well. It's a lot of traders, they get so frustrated that by the time they get to, price gets down to here, they feel like they're missing out on it. Yep, it's breaking support, it must be going down much further, and they enter a sell positions right here, and then they find that they get stopped out almost instantly because they didn't wait for the candle to close to see if it will actually support at this zone. And as you can see, price supported here, giving a nice pin bar type candle, rejection candle at our support zone, telling us that this was a good time to start buying. And that gave a good opportunity just a few days ago. Well, a few Forex days ago. Okay, we're on the weekend at the moment. So you can see that the market rallied quite nicely. And let's have a look at that from the top of the pin bar. Right, from here, it's nice to see if it breaks above the pin bar up to, where was the market telling us to get? It was telling us to get out on this candle here, over 100 pips. Right? Because, you know, we could have gotten out at here, what, 180 pips or so. But it's nice to wait and see what the candlestick's going to say. We don't know if it's going to close like this until the end, do we? Until the 4 hours is over. It might be okay to close your position in profit when you've got like 10 minutes left, because this is like closing a profit position going, okay, well, in 10 minutes, I don't think it's going to bounce back up here on the 4 hour. But you see what I'm saying here. We need patience to understand, and we need patience to see what the candle's going to close like. And I truly believe that we need to wait for patience in every single move, whether we're taking profit, whether we're locking in, we're allowing our trade to run. No matter what process you're using, patience is definitely a key aspect in the process, right? And so, you know, this would be the other end of the scale. Price is breaking above this previous high here. And so some unfortunate buyers got in here before the candle closed. Now the candle closed as a complete rejection candle, telling us that this would be a good place to start considering selling. I didn't like how big the pin was though, which meant it was a lot of risk to the potential reward. You know, not much more than a 1-to-1, so that's not the sort of trade that I'd be interested even on the 4 hour chart. But as you can see, it did offer a rejection, telling us that prices were going south. Okay, this is a perfect example of a nice trade that rejection of lower prices, and price went higher, offering over 100 pip reward with only a risk of about 72 pips. And like I said, it went over 100 pips. It went all the way up to here, right? So, you know, if you were just aiming for the previous structure point, you could have gotten about 180 pips on this trade, right? Which is over a 2-to-1. Okay, and now if you were letting one of your trades run and just waiting to see what happens, see what the price action is telling you, you would have gotten out on one of your positions at around 104 pips. Overall, you can see how this was a clean bit of price action that was formed by, you know, waiting, seeing what the market's going to do, just being patient. And this happens along every single bit of price action. As you can see, price moved all the way up to this high here, which was, you know, a resistance zone. It's actually a little bit off the resistance zone, but as you can see, price moved along, and then we got a nice price action signal here, which told us to go short. And you can put your stop above here, above the resistance zone, basically, and the price went lower. But by waiting for that clean, that really strong rejection signal, you know, it gives us a higher probability in the Forex market. Okay, like I said, I like prices to touch the resistance or the support zone, you know, at least within a few pips of each zone. Now let's have a look at another pair, and we'll see if we can see another example of what I'm talking about. Okay, here's an example. Okay, we had a resistance zone here on Euro US, and price came back up to this zone, right, on the 4-hour. Now, the first time it didn't touch the resistance zone, so we would have been like, okay, well, it didn't get there, right? Then price came back up again, didn't get there again, price didn't come back up there again, and we didn't get there again. So what did this mean? We're just being patient on this trade, and it didn't get to our resistance zone. It came close, and this was completely a valid place to start trading. But because, you know, being a patient trader, or, you know, knowing the patience, we can wait at this zone for it to get here. Unfortunately, it just didn't get there, and that does happen. However, as you can see, we came back down here, which was previous structure. Let me show you this on the daily. Previous structure point here and here. And let's have a look. Now price gave a nice signal here, and price went higher. Okay, nice bit of price action. However, waiting for that close was essential in order to get that good signal. See this candle here? All right, and then price moved up. Okay, offering a nice risk reward. Touched the support zone, the identified support zone off the daily. Okay, so that's just a little bit of summary there. Like I was saying, you've got to wait for the candle to close. We've got to wait for prices to get to where we want it to go. You know, trading is not a race. It's not something that you can just sit. And this is probably the mindset that you want to get into is you can't just sit down and jump on the chart and go, okay, I'm going to trade now. You know, there's pretty much no traders out there that can just do that. You can't just sit down. You know, you'll quite commonly find trades every day, but you can't just sit down and force the trade. It just doesn't work that way. Now, if you're trading off the lower time frames, then yeah, you can get more and more opportunities, which you could argue with me saying, you know, well, I'm getting trades all the time on the 5-minute and the 1-minute, but those sort of time zones aren't the sort of trading time zones that the majority of people want to trade. So, you know, like that person is looking on a different scale. And at the same time, I would be looking for the high probability zones on those time frames as well, in general, just to give you that little bit of an edge. And so that's what I was trying to say. My point is, you know, that patience, that waiting for price to get to our setups, waiting for the price to get to where we want it to come. And here's an example of a recent move on the Australia US. Let's have a look at this in detail. Okay, so we had this awesome support structure here to left, double bottom, triple bottom we're at now. And as you can see, price got there, broke lower, okay, closed lower, okay, and then we got a nice little pin bar, didn't violate the lows of the previous candle, and then price just pushed up and we broke above the 89 handle, which was a key handle that the price needed to hold in order to maintain this zone. And we did this by the weekend. which is quite interesting. We'll see how market opens on Monday. But as you can see, all those people that were impatient and didn't have enough patience, they might have entered the market here, seen any form of any form of price action in here, entered a trade to find that their trade is going into drawdown, and they're like, oh, what's going on? Or they've been stopped out in this zone, and lo and behold, they could have been right in the first place just by being a little bit patient. So you always want to wait for your price action to end. And like I said, having a bit of patience here, because we got a pin bar below, we had to be a little bit patient because it's below the support zone, the identified support zone. So, but now that price action has bounced above, that gives us the heads up that yes, we can look for retracements or anything, looking for a way to get in on a buy trade. And you can do that by, following the trading plan that you're trading, right? And we can look for a buy signal if this opens up on Monday quite nicely, or next market open nicely. And this is an example of, if you didn't have enough patience, didn't wait for the price action, you could have been taking a small loss here on the Australian, just getting in a bit too early. Okay, so that's basically in a nutshell. Patience is a very, very important thing. It's an important thing for taking profit, allowing you, having the patience to be able to hold on to winning trades. As an example, at times I'll be holding on to a winning trade for weeks. And to some people, they'd be like, whoa, Timon, that's a long time. To me, it's not. But this is something that we got to develop as traders. When I first was getting into trading and learning the structure of trading, learning the process, holding onto a trade for more than a few hours seemed like a long time, or holding a trade for more than a day seemed like a long time back then. But now, like as and as you've developed your own personal strategy that works, you've got to abide by the process of that strategy, and sometimes it involves holding trades for weeks or even longer. Some trades I've held for months. And this is just an example of understanding that when your trade is in profit, we're not going to have every trade being a winner trade. So that when we have profiting trades, we've got to understand we've got to have a bit of patience in order to allow those trades to run with whatever process that your strategy allows you to be able to get as much money from the market and lock in along the way, so that we can, locking in your stop loss is what I mean there when I'm saying locking in, guys. And just understanding that, we've got to try and get as much from the market during those times, because when we get a little losing streak, or you get a few losers in a row, all those winners and those trades that we've been holding on to and having patience with are what going to maintain our account and keep our account growing no matter what. And that's the other thing too. We can look at it on a nutshell. Any strategy that has over basically any strategy that has over a 55 to 70% success ratio is an amazing strategy, as long as it aligns with good risk to reward, right? And this is one of the topics that I go over in detail in the Engulfing Trader strategy as well, Engulfing Trader series. So if you haven't checked that out, you should go check that out, but you can jump over my site. But that's what I'm trying to say. That's premium trading, because that's a complete course just there, understanding the mechanics of allowing a trade to run as long as possible. It's not something you can just, it's a complete training. It's a complete, changing the mindset into, a trader that it's thinking long term as well as short term. You want to be thinking short term for losses and long term for winners. And a lot of people change it the other way around. They think long term for, and this is a bad habit that some traders fall into. They hold on to their losers, and they find that they're letting go of their winners early, and that's a bad habit to form into. And I can understand that when it gets to the point where you have a few losing trades and you sort of feel like that's the way to do it. But it could be your strategy, it could be the way that you're trading. Maybe you're not waiting for those high probability zones, but you've got to keep focused on that patience game, that aspect of patience that that when you are aligning your trades with high probability, with high probability zones, or the trend, or a pullback in the trend, that you want to be going for more than a one-to-one reward on every trade. And that does involve patience. And that's probably one of the key aspects that some traders find a bit of a hurdle. If you're the sort of trader that's just taking 10, 15, 20 pips from the market, or 25 pips or 30 pips in the market, you might want to just step back from the charts for a moment and just say, hey, look, but if you're profitable with what you're doing, and I highly doubt that people are profitable if they're just taking small amounts from the market. What I'm trying to say is, don't try to fix anything if you are profitable, right? If you're already profitable, don't try to fix anything. Okay, that's another problem that traders have as well, and that's an aspect of patience as well, is we don't want to try and fix something that's not broken, right? But if you are not fully profitable and you're not fully getting it with trading, you just keep pushing it, and you're just taking break-even levels and stuff like that, well, then this is for you. You've got to understand that it's most likely patience and your psychology that is keeping you in this cycle of eating, taking little nibbles from the Forex market, and then when you finally get a loss, the loss is like, maybe 2 times your winning ratio. And so that's what a lot of traders do. They get into this pattern of the opposite to what we want to be as traders. Not waiting for the right zones, not waiting for the right price action to close, always thinking, oh, that's good enough, and they get in the market, and then to later find they've taken a loss. And, it's a process. So don't be hard on yourself. But at the same time, you've got to understand that, that this is not something that, you want to think time constructive. And if you're trying to leverage your money in the right sort of way, it's better to take, on my personal preference and what I've noticed over all my years of trading, is you want to take less trades and you want to hold on to them as much as possible, right? When you've got a good winning trade, there's nothing better than getting a 2, 3, or maybe even a 4 to 1 on one trade, and it builds your account up by like 6 or 7% in a month. Okay, which is just astounding. Like this, you've got to understand as well, if you're getting more than 4 or 5% on your account every month as a trader, then you are one of the top traders in the world as well. And I've mentioned this before as well. I like to set a goal for at least a minimum of 10%. But I'm an experienced trader, and I've been in the trading arena for a long period of time. Okay, but you don't want to put unrealistic goals on yourself, and that's an aspect of patience as well. If you're putting unrealistic goals on yourself, you feel like you've got to take profit, to lock it in and get to your certain percentage goal. But seriously, let's look at this for a second. 10% is only a couple of successful trades if they're good risk to reward. It's about 3 successful trades if it's good risk reward. Okay, so you can get that in a few trades in 1 week. Okay, and this is what I was trying to say to you, is it's so much better to just sit, wait in the bushes. It's almost like wait in the bushes, like like a hunter, or a panther or whatever. You're hunting and you're just waiting. You're waiting for that right candle, that right level, and then bam, that's when you execute your trade. And it either works in your favor because you have the probability on your side, and yes, sometimes it's not going to work, but the majority of the time it will work if you follow the process, if you follow the good strategy, such as the strategy I shared recently, like my premium trading strategy, which is called the Engulfing Trader. Like I said, you can find out all about that if you haven't found out about that just yet. You can just jump over my site at www.forexreviews.info. And that's like premium trading, that, guys, because that's an extremely important aspect of following the process with trading. And so that's why this is such an important aspect of having this as part 9 in the price action traders mindset, because we can go through, we can have our Fibonacci, we can have our looking for structure, we can have our we can have everything. We can have money management down, we can have where to start looking for evidence, we can have our psychology quite up. Patience is partly psychology as well, I will have to agree there. We can have all those elements, but if we're not patient enough, and we want those instant profits, and we see the market look more like instant pips world, well, that's going to be a hindrance. It's not a benefit. And so you want to steer away from that. You want to get into this patience aspect, waiting for the signal, waiting for the zone, waiting for the good setup. You know, when everything lines up, just take a couple of breaths, and you know, it's better to enter a little tiny bit late, than it is to enter a little bit early. And that's a really good point as well. And you know what? It's so many traders as well. And this is another aspect that I have to go over just before I finish this video, because there's so many traders out there that they'll get a losing trade. They'll get one losing trade and they'll think, whoa, what did I do wrong? Okay, the structure was right. The price action was right. Everything looked right. You know, it was in profit. You know, it was up 45, 50 pips. And I just hadn't gotten to my break-even target before I was going to lock it in. And then it came back and it went past my trade and then it hit my stop loss. What am I done wrong? Maybe I should have locked in a break-even early. No. You got to scrap all that thinking, because trading is a process. And what you've done is you've done nothing wrong. Your assessment was right. So pat yourself on the back and say, hey, look, my assessment was right, but the trade didn't work out. You know, no one can have 100% assessment. And you'll get better at, you know, once you start developing this structure and this process and stuff like that, you'll get better at assessing the market. But part of the way of getting better at assessing the market too is understanding that, you know, we can't be right 100% of the time. You know, if we can be right more than 65% of the time, you should be patting yourself on the back and saying, yeah, I'm so glad I'm right 65% of the time. So why do I worry about the few losses that I get every now and then? Or I'm right 70% of the time. Whatever your success ratio, I'm sure you know your own success ratio. We all have a different, slightly different success ratio. And I'll tell you the secret to this as well. Most success ratios are defined partly by psychology and patience and waiting for the right setup and the filtering, you know. And you know, sometimes I will see a trade and it almost is perfect. You've got all the aspects. You know, it could be a pullback at 61.8 on the Fibonacci, got a bit of price action, but then there's just one element that doesn't look right, and so I don't take the trade. And then, you know, the trade doesn't, and then you know, later I might find the trade does go right. But there might have been one element which I said, oh no, that just didn't, you know, that just wasn't the right type of price action, or it just wasn't 100% perfect. And I've mentioned this before, that, you know, we don't want to have 100% perfect price action, because a lot of the time there isn't 100% perfect price action. However, and I'll say however here, you know, I'm being patient, waiting for that signal, and if it didn't look at 100% right, I didn't take the trade. And I think that, you know, we as traders, we should be like that as well. You know, not every time we should try and force the trade, you know. And, you know, that's the thing, is when you get all those alignments lining up and it looks good, and you've got some nice price action, which it always is when it's right, usually, take the trade, because that's what your process tells you to do, whatever trading strategy you're using, you know. And so that's why patience is such an important thing in trading, and why it can eat up people's trading accounts. And the banks know this as well. They know that the rationale of most people is instant. We want to be able to just sit down, have a coffee, or, you know, have a nice cool drink, and we want to just take a trade, sit there for a few minutes, take profit. But the thing is, the Forex market doesn't work that way. The market can be very tough if you don't follow the process. The process is what makes you have a bit of control of this market. It makes you be a part of it. It makes you take away a lot of that mental and psychological aspect of, oh, you know, I could lose this trade. Well, you know, if you're following a good process, you know your rough figures of your success ratio. So you just need to stick to that, and you just got to stick to the process. Don't be too impatient, just wait for things to line up a bit. And, you know, you'll thank me, you know, trust me, you'll thank me by just spending a little bit more time. And, you know, this is the other thing too, is don't be so hard on yourself if you are a bit impatient. What I recommend you do is you just write down a list of the things that you do wrong in trading, but don't emphasize them. Don't try to visualize them, because that's a negative sort of manifestation as well, us thinking of negative aspects in our trading. What you want to do is you want to write down the things that you're doing wrong, and then below that, you want to write down the good attribute of you in that situation, meaning the way that you want to be in that situation. And this is a bit of projecting, right? And the top traders in the world, this is not, this is not all just, this is not spiritual or anything like that. This is top mental sort of training, is that you've got to define what sort of trader you are. If you're having trouble sticking to the rules, write down, I love sticking to the rules. If you're not holding on to trades long enough than you used to, say, I love holding on to trades. And then, every single time you do a trade, and say you've got a list of about 5 little issues you have, or just 3 issues you have in your trading, and one of them could, they could be all patience related. Then maybe none of them are patience related, but one of them could be, you're cutting your losses too early. It could be you're taking your profits too quickly, or you might not be waiting for the right price action signal. So what you're trying to do is you just want to take one of those wrongdoings out every single time you take a trade next, until eventually you're down to no wrongdoings. I'll give you an example of this with me. When I first went off using indicators on the chart, and this was going back well and truly over a year ago when I stopped using indicators completely. And, occasionally from time to time I have used indicators for confluence, but nothing to actually execute a trade or anything like that. Okay, so I want to go back to my point here. When using indicators, I actually, when I became really good at price action, started getting into the mindset and the process, whatever, I kept the indicators on my chart. And I didn't actually use them. It took me a long time to get rid of them, and I suppose that was a habit. See, this is the thing, is we form habits, and that was a bad habit of mine, and it took me a long time, even though this is over a year ago, even though it seems like such a simple thing, when I finally removed that indicator, it took a lot of the weaknesses that I probably had at that time as well. It was like that was part of my weakness as well, so it was a strength to be able to go back to clean charts completely. And there was a little bit of a struggle, like, because even when I went back to clean charts, I still had that stochastic on there, or I still had, I never really used the MACD or anything like that. I mean, I did try it and stuff like that, but I never really liked the MACD sort of indicator. But like I said, I had a thing with the stochastic for quite a while, even though I knew for over a year that the stochastic did not work at all. It did not give me a benefit. There was no such thing as overbought, and there was no such thing as oversold. They were all just hype, and I promoted stuff. The top traders in the world do not use indicators. That's just a fact, right? And if some of the top traders are using indicators, they're just using them as a way of having a tiny little bit of extra confluence. They do not use it for instigating their trades. They use it maybe like when structure is at the right place and when they've seen price action as well. Then they might go look at the indicator briefly and go, okay, the indicator's lining up as well. But the indicator really doesn't mean anything. They're just using it because I suppose that's a habit that they've got. It's not really affecting their trading because their process is still focusing on the most successful aspects in trading as well. And so when you look at, when you're looking at other traders and you see that they're using a lot of indicators, you might want to ask yourself, if this is a successful trader, that is, if it is a profitable trader, then you want to maybe ask yourself, are they really relying on that indicator? And probably 9 times out of 10, I can probably tell you that they're not. They're just using it as a habit or an extra level of confluence. It's like the last tick on the box for these guys. Because, I firmly believe that all price action trading strategies are way more successful than any other form of trading strategy on the planet. I've been trading price action for a long period of time. I've spent time with a lot of top other price action traders as well, and we can all agree, there'd be no way we'd ever go back to using any other form of indicator or anything like that, because price action is immediate, it's direct, it's telling us exactly what's happening on the chart right there and then, and we can filter out our understanding from previous experiences of what that sort of price action has done to what most likely is going to happen in the market next time. And it's just nice to know that you're looking at something that's directly on the chart as well. Okay, so here's my point. Patience. you know, look at yourself in this situation. It's once again, it's like a little bit of a psychology recap, but because it's such an important aspect, you know, it's really good that we're going over this in part 9. And so, you know, this is basically it, guys. I just, you know, I'm sure you all can relate as well. You know, waiting for that price action setup or waiting for that structure setup. You know, waiting for whatever it is, your profit. You might want to ask yourself too. You know, you might be finding that you're the sort of trader that doesn't like to hold your positions for longer than a week. And you know, it's abiding. It's actually breaking the process of your trading. You know, you might want to step back and actually look at it and see if that's a profitable way of actually the way that you're trading as well. Because if you've got a profit position, I can tell you, it's much better to hold positions for long periods of time. But then again, you know, you guys could be also, people in that situation could be trading extremely low periods of, extremely low time frames, like the 15-minute or lower, which means that you don't really need to hold your trades for very long. It could be day trading as well, and that's a completely different aspect of trading in general. Like, there's two different types of trading. There's, you know, there's day trading, which is, you know, you're just going for a very short few hours, sort of, you know, it could be up to 4 or 5 hours holding position, or maybe just overnight. Or there's also, you know, taking trading positions based off, you know, the way the market is flowing, which is more so like, I'm sort of an in-between. I can do a bit of day trading, but I can also switch between the two. And so, you know, we all define ourselves as traders in different ways, but, you know, but every aspect, even for a day trader, the number one aspect you want to ask them is, you know, some days they can't even trade because the market is just not ebbing the way that they want. You can't force a trade. You just can't do it. But when the market is in the right conditions and it's looking really well, it's a good to go. Do you know what I'm saying? So that's really my video for the day. Is patience affecting you? Let me know. Is affecting you when you're trading negatively, or is it affecting you? You know, I've heard of people that are too patient and they hold positions for way too long, and the market is saying get out, get out, get out, get out, get out, get out, and they don't want to get out. And that's another aspect of patience. I mean, you can be too patient in the market. You know, you want to lock in as the market's heading more and more and more in your favor. And if the market does turn around, you do want to get out, guys. You know, so that there is an added element to being too relaxed in the situation as well. So let me know, guys, if patience is a key factor that is affecting you in your trading by commenting below. If you appreciate this video or it has helped you in some way, do hit the like button. I really appreciate it, guys, and it lets me know you want more, and it just lets me know that, you know, you're appreciating all these series I'm bringing out. Part 10 of the Price Action Traders Mindset will be coming out in probably the next week or so, although we are coming up to Christmas, guys, so bear with me. I may bring it out in the first week of January because I'm probably going to be quite busy next week. So for all those people that have been watching this series, and for all those people that are just watching this for the first time, and, you know, just before, if you're watching it just before Christmas, I just want to say Merry Christmas and have a really, really great New Year, guys, and happy trading. Okay, bye for now.